Hi guys, welcome back to our channel, and I'd like to apologize for not posting for a long time. It's been a long time now, it's been a minute. We've been busy with other projects, so we haven't found time to post any video. But anyway, on today's video, we'll be talking about liquidity, and I hope that everyone will understand the concepts that we'll be explaining today because it's a very interesting topic, liquidity. Now, the first question I want to pose to everyone is, why do 90% of us fail in Forex? And the answer to that is very simple, because we are all liquidity. Now, before I continue, let me take you back to something I was reading. It says that the Forex exchange or Forex market is the largest financial market in the world, larger even than the stock market, with a daily volume of 6.6 trillion. Now, I want you to pay attention on this, with a daily volume of 6.6 trillion. Now, if you can understand this and understand what liquidity is, you'll be able to trade with confidence and trading will make sense to you. But if you don't understand this, you'll keep losing in the market because you'll also be part of what we call a liquidity pool, which I'll explain in the next video. But for today, I want us to have a discussion about what is liquidity. Now, this 6.6 trillion is generated because we need the forex market to survive. For example, if I find an account with 5,000 rands or 5,000 US dollars and you also do the same, so we have two accounts which are identical. If my account gets blown and your account hits take profit, what happens is there are two transactions here. One of the transaction was successful and the other was not. So the person who was not successful, his funds were taken to the other person. That's how the forex market operates. There's millions of us who go into the market industry to trade, only to find ourselves in the wrong side of the market and we end up losing money. The money we use is then taken to pay those who were successful in that position, and it's also taken by the big guys. So there's a lot of things which are involved in the forex market. It's actually like chess. There's a lot of things involved. So we have two types of liquidity. We have engineered liquidity and we have unengineered liquidity. Now, engineered liquidity is the liquidity that keeps the forex market going. Now remember, no one has funded the forex market. Like, no one has came up with a lot of money to put on the forex market for people to come and have a piece of. We actually need people to lose in the forex market in order for the forex market to keep working. Now, 90% of us lose in the forex market because we don't understand the concept of liquidity. We don't actually understand where this money is being generated. Now, every time I say liquidity, what you should think about is the money which is being generated. So every time I say liquidity, just think about money. Where is this whole money coming from? You're not just downloading numbers and getting them to account, and just like that, you have $5,000 in your account. No. There's actually a lot going on in the forex market which people don't really want to talk about, and that's what we'll be focusing on today: engineered liquidity and unengineered liquidity. Now let's start with engineered liquidity. Steps of engineering liquidity. Now, like everyone who's trading in the forex market today, the first thing you do, if you've never heard of forex, is you will hear about forex. You will hear through a friend, you will hear on your Facebook, or you'll see someone who's trading on Instagram, but you'll first hear about forex. After hearing about forex, what's going to happen? It will get you curious. Now, after being curious, what are you going to do? You're going to start going to your Facebook, you're going to start going to your TikToks, to your Instagram, and start searching people who are actually successful in Forex. And what's the first thing you're going to see? You're going to see them going with nice cars, having nice cars, BMWs, Mercedes-Benz, and Rolls-Royce, all those nice cars. Then you'll see them having nice houses and going to nice parties. And what that's going to do to you is going to hook you. It's going to invite you to the market. It's going to pull you. It's going to suck you into the market. Then afterward, what are you going to do? You're going to start doing your research. Now you'll come across things like baby pips. You'll come across books and research and all that which is designed to get you to learn Forex. Now, the fourth step is you start learning. Now, learning, you start with your trend lines, you start learning your support and resistance, you start learning your double bottoms, your held and shoulders, and all this. Now, that is part of engineering liquidity. Now, we have big guys in the Forex market, like I said before, your big banks, your hedge funds, all those big guys who can move the market. Like me and you, the guys who are trading using our laptops at homes, we can barely move the markets. Even if we place with the biggest lot size we can barely move the markets. But the guys who really move the markets are the big guys, the institutions who actually control the markets, because they invest a lot of money, and because of doing that, they can actually move the market to the direction which they desire. But what's the problem here? The problem here is, in order for them to continue making money and making profits, they need people to generate liquidity with. Who are those people I'm talking about? The people I'm talking about here, it's me and you. What do? We hear about Forex, we see successful stories, we research about it, we learn. And after doing that, we start opening accounts with brokers, and we invest our hard-earned cash into this market because of the belief of having the success we've seen in our Instagrams and Facebook. After doing that, what happens? We'll end up failing. Then what do we do after? We'll invest, then we'll fail again until we give up after losing a lot of money. What were we doing? We were part of liquidity. Now let me explain this more further using this. Now, have you realized when you go to your when you learn Forex, they start teaching you about things like double top. So for example, you see the market doing this, and according to the books and the videos, YouTube videos, thousands of YouTube videos on YouTube, when you see a formation happening like this, and you see the market doing this, and you see the market going down, you already know that this is forming what we call a double top. So what do most of us do? We just do that and call this a double top. So what does how are we supposed to trade this? We're supposed to place orders here, sell orders. So when the market comes here, it's going to trigger our orders, then we place our take profit just where it started. And where do we place our stop loss? We place our stop loss just above them. Now, what will the market do? So now, because this was generated by the market makers, we have people we call market makers. These are the guys who generate liquidity. Now, what these guys know is, they know the books we read, they know the YouTube videos we watch, they know all the patterns that we know. Why? Because they taught us these patterns, they taught us these double bottoms, so we can come into the market and invest, and after investing, they make money using us, so the market can continue existing. So what you see the market doing is, the market will respect whatever you're doing. It will go down, it will click your order, it will continue going down, giving you false hope for you to increase your orders and for more people to go in. But within a second or within a minute, you'll see the market going up. When it goes up, it will trigger a stop loss. Now it has collected all this liquidity. Then afterwards, it will continue going down. Then a lot of people will say that the Forex market is a false market. It's not really a scam. Forex is not a scam, because all these things are engineered to make you lose money. Now, these are the things you need to understand about the double bottoms and the double tops. Many of us have been victims of this, where we'll see a nice setup, we'll place our orders, the market will respect it for a minute, then we'll see these big engulfing candles, and it will go catch our stop loss, then it will continue to our desired direction. Now, these things are what we call engineered liquidity. Now, these hedge funds and big banks, they do this deliberately, because now they want to generate the liquidity they need in order for them to make money. Now, let me explain about something which is familiar to us all. When the market is ranging, let's say it's going up, it's going down, it's going up, it's going down, it's going up, and it's going down. What do the books tell you? The books, they tell you that this will have what we call support and resistance, a floor and a ceiling. And the books will tell you that you need to place your buy orders here, and you need to put your stop loss here. Then you also need to place your stop loss here and have your sell orders here. Let me change the colors so you can have understand the two lines. Now what happens in the market is the market will then go up. It will click it will click the buy orders, because now this is what breakout traders do. They place orders there. It will click your orders, it will go down, it will hit your stop loss and click the sell orders. Then it will continue going up to their desired direction. So now it has played with the guys who are saying it's going to be a buy, is also played with the guys who are selling, saying it's going to be a sell. In fact, sometimes it will do this. It will go to your desired direction, it will click your buy orders, it will come back and it will respect this point, then continue going up. Now what do most people do? Place they'll place a buy order here because it's a break and retest. After placing a buy here, it will then continue down, taking the stop loss of both these people, because your stop loss are going to be here. Now, if you understand things like this, you'll be able to trade in the market with confidence. Now, these guys, they put up all these patterns. Like, for example, you can easily search any pattern. You can easily search Forex. You can easily search Forex pattern and you see all these patterns. This is what I'm talking about: the neckline, the stop loss, the target, the entry, the stop loss, the target. All these are engineered for you to understand, do, master, and go to your account, place them. But now these guys, they know where your stop loss is and they know where your target is. You'll see the market going down, not reaching your target, then going back and catching you on your stop loss. Now, all these things are called engineered liquidity. We need these things to keep the market going. Now, if you can understand when is liquidity engineered and when is liquidity not engineered, and when the big guys are coming, guys, there's no such thing as engulfing candles. Engulfing candles, those huge candles, it's when the hedge funds and the big banks are coming into the markets. If you can understand that and understand order blocks and where these guys have left their orders and when do they need to come back and take their orders, then you'll be able to understand what engineered liquidity is. Today, I don't want to talk about liquidity and how you see it and how you avoid it. I just want you to understand that you are part of a game which is bigger than what you think. You are here to lose your money. That's how Forex market is being engineered. Let's continue to unengineered liquidity. There's something we like to call unengineered liquidity here in our academy. Now, unengineered liquidity, it's when you get a mentor for signals. Then they give you a false signal, then you lose your money. Then can give you a false signal because of point number 5. There's broker A and broker B. Have you get have you realized that some people get mentors? After getting mentors, when you go to the Instagram of that mentor, you will see that mentor working with a certain broker, and you'll ask yourself, why is this mentor working with a certain broker? But you'll keep quiet and continue getting signals, but 90% of the signals the mentor will be providing will be false, but he's making money or she's making money. You should ask yourself that question: why are the mentors making money but their students are not making money? Now, the answer is simple. We have broker A and we have broker B type. Broker A type is the right broker, is the brokers which make money using commission. Whenever you place a trade, they take a certain percentage. Whether you win or lose, they still make money. Those are good brokers. Those are brokers which we're supposed to use. But no broker is written broker A or broker B. We just have to choose a broker and trust that broker. Now, broker B work with mentors, your favorite mentors, the mentors you love, the mentors you praise, the mentors who say they are doctors and they are professors and they are pastors of Forex, which is false. So now what broker B does is they take your orders, they place them virtually. So you'll think that your orders were placed in the market, but in actual fact, they were not placed in the market. What they do is they know that your mentor is going to give you a wrong signal. So they don't place your orders. What they do is they place your order virtually. After you have lost all your money, you've blown your account, they then take that money they then keep that money to themselves, because getting commission, it's not really profitable as like getting all your 5,000 rands account. So there's broker A and broker B. You need to understand that before you get all these doji mentors you guys have, which gives you signals and start managing your accounts. Now, account management is another unengineered liquidity. You'll give a mentor because you trust them. The next thing they blow your account. What are you going to do? You cannot take them to court, because now there's no law that says you should give someone money to invest for you. These guys are not trained professionals. Then you also get robots. Now, these guys you buy robots from, these guys don't really even know which language was used to program. If you can ask them which language was used to program these robots, they cannot even tell you. You know why? Because these guys buy EMAs or robots and they edit them, put a flashy backgrounds with their logo, their contact details, and you'll think it's their robot. You will see them making money using the robot, but you're not making money using the robot. Now you're part of the unengineered liquidity. You actually making yourself a fool. So you should understand all those things. Then you'll also get those guys who say, look, invest 500 rands, we're going to make you 1,000 rands in 2 hours. There's no such thing, guys. Forex, you have to learn the skill and master it. There's no shortcut in forex trading. Even if it takes you 3 years to know forex, you have to take 3 years to know forex. Now, before I move on, let me go back to engineered liquidity. Now, someone today told me that when they trade, they use an app called CNBC or investing.com. You guys should be careful of these apps. I've used these apps, I've been a victim of these apps, and I hope I'm not going to get in trouble for saying this. But have you opened the app? Then afterwards, you see that the app, all the companies are performing nicely. So they're giving you a signal to say buy. But after you've bought, after a second, the market goes the opposite direction. It happened last week with some certain event. All your sketchy mentors gave you signals saying that Nasdaq is going to buy, but Nasdaq was not going to buy. It actually sold after a second. Where did they get that signal? They get it from all these funny apps. So you should be careful of these apps. You should understand these apps, that they can be part of engineered liquidity. Now, I know I might get into trouble with explaining all of this, but it is time you guys understand how these things work. Now, moving on. In Blue League's Market Academy, we don't give any signals, we don't do any account management, we just teach you Forex. So we teach you retail trading, which is your support, resistance, your trend line, and we also explain to you why we don't favor that type of trading, because there's a lot of manipulation in that type of trading. A lot of people know that type of trading, so the big guys know that we know that type of trading. We prefer teaching people smart money concept, because smart money concept is a bit closer to what the big guys, the hedge funds, the big banks are doing. So we feel like if you understand and think like how these guys are doing, you'll be able to be on the safer side of forex. You'll be able to have tight stop losses, and you'll be able to have sniper entry. Now, smart money concepts gives you that edge in the market, unlike retail trading. I can teach a 5-year-old retail trading, and they can actually know how to do it, because it's only double bottoms. You just need lines which you don't know why you're connecting them. You just need. So guys, you need to learn and think like these guys. Then you also teach you how to trade fundamentals like these guys do. The big guys, the big banks. Now, fundamentals. Before fundamentals, you'll see a liquidity pool being formed. Just know that all that trend line they're forming nicely is so that when the news come, they can sweep all your stop loss. But in this video, I don't want to explain all of that. I just wanted us to have a conversation about liquidity and why 90% of us are failing in the forex market. Now, for those of you who might be interested in joining our our academy and understanding more and learning other blocks, learning imbalances, market inefficiency, learning point of interest, learning liquidity, learning how we trade. You guys can email us on that email address. You can pause the video, take the email address. We'll be happy to answer emails and talk to you. Now, one last thing, we have two announcements. Announcement one is we'll be doing a boot camp, a online boot camp for the whole month of October. The details will be on the description. We'll just leave a link to our WhatsApp public group channel. Then you'll talk to us. If you're interested, you'll be part of that. Then number two, we'll be doing a talk. So please comment with the name of your country and the city. Then we'll check the number of people from the comments and we'll choose from there. Guys, I think it's time. As Africans, we also have something. As Africans, like, we also have our own united thing. This thing of having mentors who think they own the forex market is a problem. It needs to stop. Guys in the UK, guys in the US, they united and they're creating something which is beneficial. They're creating a trading community, and that's why they succeed. This thing which is happening here in Africa, it's really going to kill us. So that's why we're starting this organization, we're starting this academy, so we can give everyone a chance to succeed in this. I thank you guys. Please don't forget to subscribe and like and share this video so that more people are aware of this liquidity pool or this liquidity being generated. Thank you guys. Catch you on our next